Microsoft is scheduled to report quarterly financial results on October 30th, 2024, after the markets close, and I'll update what investors can expect from Microsoft when the company delivers those financial results. Also, I'll answer if Microsoft stock is a buy, hold, or a sell, and whether or not investors should buy the stock before earnings or after earnings. Additionally, I'll discuss one critical number to look out for from Microsoft, which has huge implications for the AI industry overall. Remember, Microsoft is one of NVIDIA's biggest customers for NVIDIA's technology. And so this number that I'm going to talk about in the video could have huge implications for not just Microsoft, but also NVIDIA stock investors. So I'll discuss all of that in this short video, so let's get right into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so let's first talk about my existing rating on Microsoft stock. I've had the stock rated as a buy all year long in 2024. I last updated that recommendation on July 30th and I rated it as a buy again. So this is my personal list that I keep for my own informational purposes, and I update this list frequently as I evaluate companies and digest new information. Now, Microsoft stock price has performed relatively well in 2024. It's trading at a price right now at $428 per share. That's up from around $375 per share to start 2024. Now, in terms of what investors can expect from Microsoft in its upcoming quarter, the company gives a breakdown here on its various business segments, including commercial business, productivity, intelligent cloud, and more personal computing. By far, the most important segment here when the company reports financial results is going to be the intelligent cloud. This is where the company reports results for its artificial intelligence business for revenues in that business segment. Now, the segment is not the largest for Microsoft, but it's the most important right now because of how much investor interest is going into this segment. That segment is expected to grow by 28 to 29% in the upcoming quarter. If the company delivers anywhere above this level, investors will be very excited about these results. There's increasing scrutiny here from investors because Microsoft, as I mentioned, has been spending tens of billions of dollars to develop its AI technology, and investors want to start to see results from those investments. Investors are not that patient. They're not willing to wait several years before they start to see results. They want to see these AI investment starting to pay off. And I think Microsoft will discuss a lot of that in the upcoming quarter. Now, one of Microsoft's most largest segments in terms of revenue and profitability is Windows OEM revenue. This is the revenue Microsoft generates when it licenses its Windows technology to computer manufacturers and creators and sellers like Hewlett Packard, Lenovo, Dell, etc., etc. So they are forecasting a relatively flat performance year over year in this segment. The most recent data I got from the personal computing industry overall, not just for Microsoft, was a decline in the latest quarter in the low single digits. So if Microsoft delivers flat year over year revenue in this segment, it means it gained market share. Now, this recovery in the personal computing segment has been slower than expected. I thought by this time there would be a robust recovery in this segment, but it's been slower developing. People are waiting to upgrade their computers that they bought in 2020 and 2021. I thought the upgrade cycle would have gotten underway, but I think it's delayed instead of completely canceled. People bought computers at an accelerating rate in 2020 and 2021, and those computers are now 3, 4 years old, and next year they'll be 4 or 5 years old. And so if you're using these computers for work, they're starting to get dated, and so they're going to need to be upgraded very soon. Those are key things to look out for from Microsoft in the upcoming quarter. Also, one of the bigger things to look for the full year 2025 outlook, Microsoft says that capital expenditures here in 2025 are expected to be higher than 2024, and they were much higher in 2024 than they were in 2023. This is mostly spent on developing new data centers optimized for artificial intelligence. And this is where they purchase NVIDIA's Blackwell or Hopper technology for those data centers. So if Microsoft gives an update to this outlook and says something like, oh, we're going to decrease the amount we spend, or we're not seeing the results we expected, so we're going to decrease the amount in capital expenditure. Anything negative like that with regards to its capital expenditures, whether it's in 2025 or in 2026, that could have huge negative implications for AI stocks, most prominently NVIDIA. So that's a big number to look out for from Microsoft when it updates its numbers in the quarter that just ended and they're going to report on October 30th. That's something I'll be paying close attention to, and I know I will not be the only one because investors are very, very, very attentive to how companies like Microsoft, Amazon, Alphabet are deciding about their capital expenditures because it has huge implications for many companies down the line, including NVIDIA and on and on. So if they start to decrease their spending, then down the pipeline, other AI companies will experience lower revenues and profitability. So it's a huge, huge number to look out for. Now, Microsoft is trading at a forward price to earnings of 28, which, in my opinion, this has been a relatively fair value to pay for Microsoft. It's an incredibly profitable company, and a forward PE of 28, given its competitive advantages, its growth prospects, and the potential, is a fair price to pay. Now, I talked about how profitable this company is. In the latest quarter, it generated $64.7 billion in revenue and an operating income of close to $28 billion for an operating profit margin of 43%. That's a very good operating profit margin, especially for a company at this large of a scale. You're going to be hard pressed to find companies with this kind of operating profit margin at this level of revenue with this growth, right? Microsoft grew revenue 15% in the latest quarter. So, really strong revenues with really strong profit margins and prospects going forward that suggest growth will persist. So that's why I've had Microsoft stock rated as a buy this whole time. Now, whether or not should you buy this stock before or after earnings? Now, generally, I have three different things that I could say when a stock is a buy going into earnings, right? Now that we've already said that, okay, it's a buy, it's an excellent business trading at a fair value, which is a good thing for long-term investors. But now the next choice becomes, well, how should we buy it? Should we buy it before earnings or after earnings? In most cases, I advise investors to buy after earnings because you have all the latest information, you digest that information, and then you buy the stock after earnings. Now, some investors would say, well, then I could miss out on the upside if there's something really strong in the earnings report and the stock jumps. And I say that's okay because even if you're paying a higher price, you're getting the company with less risk. Remember, the stock price is very volatile following an earnings release. So you're getting more risk if you buy it before earnings. Still, if you're very concerned about that risk of missing out, you can split your purchase in half and buy half before earnings and half after earnings. In some cases, I think the valuation is so undervalued that you can go ahead and buy ahead of earnings. I don't think that's the case here with Microsoft. As I shared with you, the price is like fair value. It's not, I don't think it's cheap. So I don't think there is much risk to the upside here. And so I would advise the most prudent solution here would be to buy Microsoft stock after earnings or do half and half, half before earnings and half after earnings. Either way, it's an excellent business trading at a fair price, and long-term investors will do well in their investing lifetime buying excellent businesses at fair prices. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.